Hey traders, Raghee here, and in this video we're going to cover some interesting setups that are happening right now for the euro and the US dollar, and I'll follow up on some of that crude oil action that we had because of the Qatar news, as well as the pound. These are some of the main headlines that were moving the markets today, and I'll show you how we were positioned in these. So if you've already checked out my trade of the week, and if you're on our email list, you already got that. It should be sitting in your inbox. And I showed you how to set up the euro or the euro futures or the FXE. Pick your asset class. The trade is the same. Okay, so next is the other side of the coin. What about the dollar? I think because we haven't punched down through some of these lows here in a meaningful way, even though we have a downtrend, I think there's an interesting opportunity for a short squeeze. It's a long squeeze in the uptrend of the euro US, and it would be a short squeeze on the dollar. Of course, you can play this with FXE and you can play the dollar with UUP, but you know, as a futures trader, I'm going to be in those DX futures. So the reason I bring up UUP and FXE is because you have a little bit more flexibility on your expiration. Okay, and I talked about that in the trade of the week video, so check that out. All right, so what if we do short squeeze here? In other words, what if we rip higher on the disappointment of Mario Draghi not encouraging the bulls that are long from, say, the 112 handle to be long from these aggressive highs? What if what if they just run for the hills and they end up selling the euro off? That's going to rally the dollar. Now, the dollar's typical hourly price movement range is what's not in play. It's the daily price movement range that I have in mind, which is nearly a full point, or about 90 cents. That could drive us to the 96.75, 96.65 area, which, as you noticed, is on the doorstep of the exhaustion zone where I would like to short DX. So I'd like to get long euro US, likely through the futures or the Forex markets, and then I could get short the DX, which, by the way, is the same trade. Some of you prefer one or the other. I want to show you how you can position yourself for this. Now, I do think the dollar is going to be heading lower throughout the year, just like I think the euro is going to be heading higher, because we're at the foothills of the pre-taper movement. Think April 2014, mid-2014 dollar as the taper conversation raged on. That's where we're at right now in the euro US. That's why I'm mentioning this is a trade that has already started. It's fresh, but it hasn't really taken off yet. So there are opportunities to get back in. Just in the last couple of weeks, we've already gotten in twice. So I don't want you thinking the trade has left you. It's not left the station yet, not completely. So one of the opportunities, a catalyst that we might have, is this Thursday. That's why I'm talking about the timing so specifically. You can buy calls here in DX, or you can prepare to fade the 97.90 to 98.20 area. Heck, you can fade this thing clear up into 98.40. What do I mean by fade? I mean, it's a short sell. So you would see the bullish momentum and you would say, okay, I'm willing to sell into that. That's a fade because the overall trend is down. All right, so that's what's happening with the euro and the dollar index. Let's talk a bit about crude right now. I don't like where crude is on the daily time frame because it's chop within chop, right? We're in a sideways market with a bearish bias. I'd rather be short crude than long, but we're in chop. So I know that until I get to either one of the range extremes, either down in here or up in here, I know that inside I'm better off going to shorter term time frames. But here's where we have to be patient enough to get clarity. One thing that's gotten interesting for me on the 15 is the fact that we have begun to sort of congest/consolidate. Now, I'm not one to draw chart patterns all over a chart. I think they're overused and oftentimes misused. But if you're waiting for the market to show you signs that it's ready to move to the upside or the downside from taking a little break, this is one of those patterns, very short term. What I'd prefer, though, is another opportunity at a trend follow on something like the 240 or even something like the 180-minute time frame. Yes, longer term intraday time frames. The trend follows here have been excellent. So if this actually just kind of moves to the upside, this could start to set up this short in this area. So keep that in mind. This would be just kind of a heads up. You know, the way you could play this would put a stop order. So a lot of people will show you chart patterns, but they don't actually tell you what to do with it. What do? Well, you actually identify not the trend line levels, but I would rather you look for a break to the upside through 47.52 or down through, say, 47.19. I'm being very specific here. Let's get on the other side of one of these two psychological levels and then see if that momentum can carry prices higher or lower. I think the overall trend is down, but I would sure love to see the 15-minute trigger a move higher so that we can see another correction and another short sell on crude. Now, the Qatar news, gang, is overall bearish. The initial reaction to any kind of tension in the Middle East will usually be a quick move to the upside because the fear is a supply disruption story. But Qatar, being kind of diplomatically sort of, you know, banished, if you will, with the Saudis, UAE, Egypt, saying, look, we don't like the cozy relationship you have with Iran. They're cutting diplomatic ties. That is not a supply disruption story, and Qatar is one of the smallest, if not the smallest, producer within OPEC. And if anything, that is going to be bearish to crude for a number of reasons. One, it could start to unsettle the OPEC production cut agreements. Two, Qatar might go ahead and say, well, we're just going to produce whatever we want. We're not going to adhere to the production cuts, okay? And the real place that this is interesting, and I think it's bearish here too, is natty gas. The natty gas story could be very interesting. They are the #1 producer of liquid nitrogen gas, LNG, period. The second largest is Australia. So I think there's an interesting opportunity there on natural gas. And I talked about that in the previous video. So again, natural gas may be the spot to watch as they might be increasing crude oil output. They may increase natty gas output too. So the downtrend in natty gas is something that we want to watch. Natty gas gapped higher for the same reason that crude did, but I think this downtrend could be one to keep an eye on. All right, next up is the S&P and Dow, and then we're going to wrap up this video. The S&P and Dow have both broken out of their sideways ranges. So for those of you that have been asking, Raghee, you playing that range anymore? I'm not at all. I'm not looking for that range any longer. I think my TradeStation charts just decided to take a little bit of a siesta. So let's head on over here to TradingView, and there we go. So what I want to do with this is, let's go here. What I want to do here is start to realize there's likely an uptrend. It's going to start to look a little bit more, I think, like NQ. We're not there yet. If I want to buy, I'm still a fan of buying NQ or Nikkei, which we are still long in. But I'm going to slowly start to recalibrate to fresh uptrends on these two. But I'm going to focus on shorter term time frames until the clarity emerges on the daily. And there's no setup here, but I want you guys to hear me. Please be cautious on ES and YM. If you're going to get bullish or bearish, please do so shorter term until the daily time frame starts to show more clarity. All right, so that's it for this video. My members, I'll see you in the premium video. We're going to recalibrate our watch list, talk about some of the setups for the Aussie this week, the RBA coming up. We'll talk about gold, and we're going to prep a lot for this Euro hot zone because it puts the Euro in play, the yen in play, as well as the US dollar. And there are a couple interesting pockets of possible US dollar strength, but you got to know which currencies to trade it against. I'll talk about that in the premium video. See you in the next update.